In this video, we are going to show you 3 Goodman Wave Theory trade setups you can learn quickly and use to trade. The first 2 are excellent trading formations for stocks, futures, and currencies at all price levels. The third may be used to find price objectives or as a trade setup. Please be sure to first view Goodman Versus Elliott as an introduction to GWT. 3 concepts distinguish Goodman from other wave and 1-2-3 methods. 1. The return. 2. Intersections. 3. The 3C rule. In GWT, as prices progress, you are able to narrow down the possible forecasts instead of them multiplying with each new price jiggle. Overlays qualify trading candidates. The more overlays, the higher percentage trade you have found. The return, intersections, and 3C rule are GSCS overlays. GCCS is the final GWT overlay. The return. From an Elliott wave perspective, the return is the 4th swing, or the second secondary swing in a 1, 2, 3, 4, 5. In Elliott, the return swing is related to the 3 swing only. In Goodman, it is related to the entire 1, 2, 3, taken as a 1 swing in the propagation of a larger 1, 2, 3. Matrices and propagation. In GWT, a 1, 2, 3 is a matrix. Matrices propagate to larger and larger matrices. Each successive matrix is connected by the return swing. A propagated matrix is a Goodman wave. Again, the return swing is the second swing of each propagated matrix, or the 4th swing of the previous matrix. The return swing digs much deeper into the 1, 2, 3 than Elliott predicts because it is related to the 1, 2, 3 matrix, not just the 3 swing. Ideally, the return will be 50% of the entire 1, 2, 3, so it will often come close to the end of the 2 swing. This indicates that the 1, 2, 3 is propagating into a larger 1, 2, 3. The original 1, 2, 3 is the 1 and the return is the 2, or secondary swing of the propagated larger matrix. The trade setup. Buy or sell near the return point, the end of the 4 swing, for the target of the total price value of the original 1, 2, 3. Of course, you will want to filter your buy or sell with other tools that you use. Never buy weakness or sell strength. Always wait for some sign the primary trend is reasserting itself. Stepping in front of a steaming locomotive is not good practice. We use something called the dagger for entries. Other techniques such as the Ross hook will also work, but the dagger is effectively a mini 1, 2, 3. Here is a chart with several return trades. Return trades in stocks, futures, and currencies are common. Another return trade. As the Goodman wave propagates, it is not unusual to get 2 or even 3 return trades in sequence. We call this riding the wave. You want to position yourself in a wave early and ride it as far as it will go. Intersections. There are 5 points to every swing and 1, 2, 3 or matrix. The beginning point, the end point, the 50% point, the measured move point. The measured move point if the swing or matrix is a secondary component instead of a primary component. An intersection in Goodman is a price at which the points of 2 matrices or swings meet. An intersection is an overlay because it helps confirm the price point as important support or resistance. In this example, the 50% point of the primary swing intersects with the end point of the secondary swing matrix. A double intersection represents the price points of two matrices or swings meeting. A triple intersection where points of three matrices or swings meet. Here, three matrices intersect, the 50% point of the largest and the endpoint of the two smaller. GWT has identified 640 intersections. These are called templates. The most important are the 6 propagation templates. The trade setup. Let's look at templates 3A and 3B. Here we have an intersection at the 50% point of the primary swing with the ending point of a secondary swing matrix. The forecast, ceteris paribus, is for prices to reverse and build a secondary primary swing forming a complete 1, 2, 3. Here is a template 3A double intersection trade. Note this is also a return trade. The overlay of a return and a double intersection is very strong. As with the return, wait for some confirmation of the turn before committing, and use other tools to confirm. The 3C rule. 3C stands for carryover, compensation, and cancellation. It is a great method for making the measured move rule more exact and calculating price objectives. The measured move. This is an ideal measured move. Primary swing 1 is the same value of primary swing 2. The secondary swing 2 is 1/2 the value of the primary swings. But both the measured move and 50% retracement are off more often than not. The 3C rule corrects this and allows accurate measure move counts. The primary 3C rule states, if the secondary swing 2 is under or over the 50% point of the first primary swing 1, it will make up the absolute value of the difference on the second primary swing 3. In GWT, there are a set of 3C rules determining how the over-under is calculated and carried through from swing to swing, matrix to matrix until it cancels and becomes an overlay. The trade setup. Here is an example of the 3C rule in practice. The difference between the 50% point and the actual ending point of the secondary swing is made up at the end point of the second primary swing. The count for the second primary swing target is always made from the 50% point of the first primary swing. Watch for triple overlays, a return which is also a 3A or 3B template, and for which the 3C cancels. The Goodman Codex. The complete writings on Goodman Wave Theory, Goodman Swing Count System, Goodman Cycle Count System, and Market Environments. Over 300 pages with many diagrams and chart examples. The Goodman blog is Mr. Archer's ongoing blog on all things Goodman. Analysis of current stock, commodity and currency markets, trading tactics, instructions, and theory. Thank you for viewing 3 GSCS Trade